ASML stock is down nearly 40% from its 52-week high, and on today's episode I want to explain where it could be in the next 5 years. ASML is the world's leading supplier of photolithography equipment, the machines that semiconductor manufacturers use to print tiny circuit patterns onto silicon wafers. Its business model centers on selling extremely complex lithography systems along with software and services to chip makers like TSMC, Samsung, and Intel. ASML's key technology is extreme ultraviolet EUV lithography and is the only company in the world that currently produces EUV tools, giving it a virtual monopoly at the leading edge. Even in deep ultraviolet EUV lithography used for slightly less advanced chip layers, ASML holds roughly 90% market share, reflecting a formidable competitive moat built on decades of research and development, proprietary optics and light source technology, and a deep ecosystem of partners. Throughout the episode, we will discuss recent earnings, the bull and bear case, and so much more. So let's get started. ASML recently reported its Q1 2025 financial results, showing significant growth despite market uncertainties. For Q1, ASML reported total net sales of 7.7 billion euros, in line with their guidance, and gross margins of 54%, which exceeded their guidance due to a favorable EUV product mix and the achievement of performance milestones. However, there were some concerning signs in the quarterly results. Net bookings, a key indicator of order demand, came in at 3.94 billion euros for the first quarter, which was lower than the forecasted of 4.9 billion euros from analysts, causing shares to drop. This may indicate some pullback from customers regarding future investments. Looking ahead, ASML expects Q2 total net sales to be between 7.2 billion to 7.7 billion euros, with the gross margins between 50 and 53%, and continues to project 2025 total net sales to be between 30 to 35 billion euros. The company also noted that recent tariffs announcements have increased uncertainty in the macro environment. Now let's understand the market. Equipment spending is recovery. Research group SEMI projects front-end fab equipment spends will rise roughly 2% to 110 billion in 2025 and another 18% in 2026, driven largely by AI data center chips. The race for high-NA is also on. Intel, Samsung, and TSMC are all working on developing smaller chips, and they will eventually all need to move on to high-NA EUV machines. Finally, the demand in China is normalizing after 2023 and 2024 being kind of a massive shopping spree for DUV machines. ASML expects China to revert to a pre-boom revenue share in 2025, even though the first quarter didn't show that just yet. Now, if we look at the bull case for ASML's growth, the strongest argument for ASML's future success is its essential role in advancing semiconductor technology, particularly for AI applications. As the sole provider of EUV lithography machines required for cutting-edge chip production, ASML is positioned to benefit tremendously from this trend. ASML's near monopoly status in advanced lithography provides significant pricing power and barriers to entry, with each new generation of chips requiring more sophisticated lithography systems. ASML's technology leadership becomes even more valuable. The company maintains a strong financial position with robust margins, including gross margins of 52%, operating margins of 33%, and profit margins of 28%. These healthy margins provide financial flexibility of continued research and development investment to maintain technological leadership. Now let's look at the bear case and potential risk. The most immediate concern for ASML is geopolitical tensions and trade restrictions. Increased US-China trade tensions and new tariffs announcements have created significant uncertainty in the market, potentially affecting ASML through direct costs from tariffs on systems chips to the US and dampening demand from customers. Additionally, the cyclical nature of the semiconductor industry possesses risk. The chip industry has flipped from growth to shrinkage numerous times in the last 20 years, suggesting potential volatility even if 2025 looks solid. Any slowdown in AI-related spending or component shortage could ripple through the broader global semiconductor supply chain, affecting ASML's growth trajectory. Now, one big thing, The most crucial metric for ASML investors to watch is net bookings. The first quarter saw net bookings of 3.9 billion euros, reflecting volatility and uncertainty in order environment. This metric serves as a leading indicator for future revenue and provides insight into customers' confidence and capital expenditure plans. Net bookings are particularly important because of ASML's long production cycle. The company's advanced EUV machines require more than a year from order to delivery, while more common, the UV machines still take around 6 months to ship. This time lag acts like a built-in buffer for near-term revenue visibility. However, any sustained weakness in bookings will eventually impact future quarters' revenue. Now, my prediction. Looking at the long term, ASML's growth trajectory will likely be tied to semiconductor industry expansion. The semiconductor industry is expected to achieve $1 trillion in sales by 2030. If ASML executes its guidance for 30 to 35 billion euros in 2025 and then grows at a mid-cycle 8% compounded annual growth rate while holding a 51% gross margin and modest buybacks, earnings per share could approach 20 to 22 euros by fiscal year of 2030, assigning a cyclical average of 35 times PE versus the 39 times today implies a share price of $1,200 to $1,500, roughly 2 times today's level. Now, obviously, high volatility with CapEx spending going down or some form of cyclicality could impact the share price, but still bullish in the adoption of high NA across all leading fabs, which could push this higher. Ready to discover more promising investment opportunities? Visit fool.com/invest to get the top 10 best stocks to buy now. That is it for today. If you found this insight valuable, hit the like button, subscribe for more, and help make our community smarter by sharing your thoughts in the comments below. Stay foolish, and we'll see you next time.